You're watching Business Television India.
Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Vandita Shivle. Joining me on the show today is Abhinav Angirish, founder of investonline.in. Welcome to the show, Abhinav, and thank you so much for joining us today. Our viewers and Abhinav, before we begin with our first query, let's take a look at the winners and losers of today. Every day we will bring you the top funds in various categories. Today we highlight funds in the debt category in the light of RBI's decision to cut repo rate by 25 bips. While it is important to stay invested for a reasonable period of time to make money, it is also very important to track fund performances. There are a large number of funds for you to choose from. Let's now take the first query. So we have Mr. Piyush S, who's from Jabalpur, and he has emailed up his query. He's 35 years old and investing since 2 years through SIP of 15,000 rupees in Sundaram Small Cap, 12,000 rupees in ABSL Equity, and 5,000 rupees each in SBI Blue Chip and Kotak Standard Multi-Cap Fund. He's looking for 15% return and has a time horizon of 10 to 15 years. He is asking, does his portfolio need any changes? Abhinav, what are you suggesting him? He's looking for 15% compounded annual growth rate. So the funds that he has just mentioned, do you think they can give him that kind of return?
So it's good to have that expectation of 15%, though it may or may not be possible to achieve that. Historically, yes, over a period of time, you do tend to make 15 to 18% returns in equity funds per se. However, what we recommend is that you do not plan for more than 12% CAGR, which is conservative, but is very achievable. Having said that, I'm not saying that he may not achieve his goal of 15% returns. With the choice of funds that he has, I think he has a very balanced and nice portfolio. He has one large cap fund, which is the SBI Blue Chip. He's carrying two multi-cap with the Kotak and Aditya Birla Sun Life Equity, and a small cap fund. So he's moderately aggressive. With the horizon he has in mind, I don't see a reason why he needs to change any scheme at the moment, though he must keep reviewing his portfolio every 6 months at least. And he should continue to keep investing, and as and when possible, try to increase the SIP amounts. So it doesn't become very cutthroat at the end of the period when he, when he wants to actually use the money for his goals.
Right. So Piyush, that's the advice for you. You can increase the kind of funds that you've chosen is perfectly fine, and you can increase the SIP amount as and when you could. All right, let's move on to our next caller, Mr. R. Krishnamurthy, who's on the line from Bengaluru. Hello and very good afternoon, sir. What's your question?
Hello, good afternoon.
Good afternoon.
Hello.
Yes,
good
Mr.
afternoon.
Krishnamurthy, please go ahead.
This one I have already given this one details.
Right.
I got one SIP PPFAS 2015 years. Kotak Balanced Advantage 1000 SIP 12 years.
Yeah.
L&T Emerging 1000 SIP 15 years. Sundaram Services 1000 SIP 18 years.
Okay.
Can you review this portfolio and
yes, of course.
for wealth creation?
All right. Sure. So he's 58 years old and he has invested in a couple of funds which he just mentioned, and he has provided us the details. His time horizon is pretty good, 18 years, and he's looking for wealth creation. What are you suggesting him?
So like you said, the wealth creation, the period is perfect. I think it's good to have that period in mind. I don't understand the reason for having specific thematic fund in the portfolio. Though thematic funds are high risk, high return portfolios, for this kind of a period per se, thematic funds typically work in cycles, right? So you could have a cycle of 2 years, 3 years of great returns, then they get subdued, and so on and so forth.
Absolutely.
Ideally, be aggressive in diversified funds. You could choose diversified mid and small cap categories. At the same time, he also has a balanced advantage fund. I don't see the reason to have that category of a fund in the portfolio, because balanced advantage are Generally very conservative portfolios. It's more, we would choose such portfolios more for retirees where they want payouts or they withdraw monies on a regular basis. So I would say you redeem from Sundaram Services and also from Kotak Balance Advantage, and you park that money into Mira Asset Emerging Blue Chip.
Okay.
So this specific fund takes about 25,000 monthly SIP at the moment. No, no lump sum. They've stopped lump sum from 2017.
Okay.
So I think you should move your assets to this and then continue investing into SIP in the existing schemes that you're investing.
All right. So, Mr. Krishnamurthy, are you clear with it?
Yeah, okay.
All right. So that was Mr. Krishnamurthy. Let's move on to our next email. That's from Mr. Paul, who's from Hyderabad. He has emailed us. He's 38 years old and currently investing through SIP of 4,000 rupees in ICICI Prudential Blue Chip and L&T Mid Cap. 3,000 rupees in Mirae Asset Emerging Blue Chip. He wants to increase his SIP amount by 12,000 rupees and subsequently by 5% annually. He wishes to accumulate 15 lakh rupees in 10 years and 20 lakh rupees in 15 years for his children's higher education. He wants to accumulate 80 lakh rupees also in 17 years for building a house and 2 crore rupees in 20 years for his retirement. He's asking what are the other funds that he could invest in. So basically he wants us, you know, to look at his financial stand and his goals and if he's in the right direction.
Right. So thankfully I think Mr. Paul is well read.
Right.
He's figured that he needs to keep increasing his SIP amounts variably on a year-to-year basis.
Absolutely.
Or more frequently than what he's been static with. Having said that, the problem I see in the portfolio is his two goals of the education per se will be achieved.
Right.
I will definitely see a problem where it comes to the retirement corpus of 2 crores, right? At 15% CHR, yes, they could be achievable.
Okay.
Once again, I would say please account for it at 12% CHR, which is fairly reasonable and very achievable.
Right.
In that case, I would say then you need an average investment of 32 to 33,000 per month as an SIP to achieve all your targets.
Okay.
See, because what happens is after 15 and 17 years, when he withdraws these two specific amounts,
Right.
you're actually reducing the power of compounding the entire corpus will go through. So, you know, by then if you have 50 to 75 lakhs which is lying, which will completely withdraw, my compounding will not be at the same effect.
Right.
Right. So that's why I need to increase my SIP amount on an average. The schemes are fine. I'm very happy with the schemes he has.
Okay.
But so he needs to, yes, increase the amount 5% every year, which is great. Interestingly, on our portal, we did introduce this concept of variable SIP. So you can set up a concept of increasing 5%, 10%, or whatever percentage you like right from the beginning. So as a disciplinary action, this option of variable SIP at investonline.in helps you to, you know, keep on increasing the SIP periodically without you physically having to do it.
Absolutely. So, you know, you mentioned about variable SIPs, which is a very interesting point here. So, could you throw some color on that for our viewers in general?
So, this is a term which we've created for our specific portal. The idea here is that, you know, since we keep saying that we need to keep meeting inflation and the expenses and so on, you should also increase your investment amount.
Right.
Because ideally you keep getting a higher amount every year if you're salaried, then you get raises and bonuses and so on.
Right.
Why not even increase investments in that case? So what we've done is we've created an option on the website where you can set up an amount which you want to increment either a monthly, quarterly or annually basis right from today itself.
Okay.
Of course, you have the freedom to stop it or increase it or edit it whenever you like.
Okay.
But at the same time, you can set up your goals right from now. And you can see a complete chart which says, okay, if I increase by 5% every year, this is what I will achieve at the end of this period.
So, you can calculate the
You
entire
can
thing
roughly at least
basically.
estimate where you will stand at the end of the period.
That's interesting. All right, let's move on to our next caller, Mr. Raghavendran, who's on the line from Bengaluru. Hello and very good afternoon, sir. What's your question?
Good afternoon, ma'am. This is Raghavendran.
Yes.
And I have been investing in mutual funds for more than 1.5 years now. Let me tell you the scripts which I have invested.
Yes, please go ahead.
HDFC Balanced Advantage Fund, D, 5.25 lakhs. Sundaram Equity Hybrid Fund, 2 lakhs. And Franklin India Smaller Cause Fund, SIP per month 5,000. And IAFL Focused Equity Fund, REG, bracket G, is 5,000 per month SIP.
All right. Yes.
And UTI Multi Assist Fund, 2,500, and one more script called HDFC Children's Fund, 2,500 per month.
Okay.
What I wanted to understand is, during the January to September, the fund was really performing well.
Yes.
But unfortunately, from October, November, due to the market slip, goes to the downtrend. Unfortunately, all these principal amounts are showing 70,000-80,000 rupees loss. Now, my total investment somewhere around 9.43 lakhs. And the returns shows today, as and today, the loss is showing somewhere around 98,000 rupees.
Okay.
What the dividend I have received in the last 1.5 years, the principal amount is reduced by near about 1 lakh. Now,
okay, yes, sure. So Mr. Raghavendran, one thing is for sure that this is a part of the game, and the only mantra for this is stay invested for a longer period of time. But let's hear from our guest what he has to say.
Okay, couple of points. His insecurity is valid. It does happen in these times where investors, when they start afresh and they suddenly say that they are returning negative returns at the moment. Let's put the points in perspective here. He's investing since, he said, about 1.5 years.
Yes.
Firstly, very short period. I'm sure when he started investing, he would have been informed that it's equity investment, it should be for a longer period. One is at least 7 to 10 years.
Absolutely.
Additionally, he's putting into an SIP. All the investments are through SIP. When investing in SIP, the idea is to average out the investments Also, when you're investing, so your tenure also is on an average. If you're investing for 7 years, you typically invest only for 3.5 years per se in SIP, in equity, which is not great as a period to invest. Two, why is he choosing dividend options? So on one hand, he's actually investing into SIP, where he wants to have more units, accumulate units at lower levels. But taking dividends out, he's not only losing on dividend distribution tax. He doesn't need the money because he's someone who's adding money to the portfolio. So why is he withdrawing that money? Three, the portfolio is fine, but again, he has equity savings fund like we discussed in the last question. It doesn't make sense.
Fund.
It's a mixture of arbitrage, equity and debt. But I don't think it needs this fund. His other three funds are fine with the Franklin India smaller companies and so on. Please understand, last year, the small cap index and the mid cap index were down about 25 and 20% respectively. If you're still in SIP, you are practically down 3 to 4%, which is not bad at all. In fact, it's great for you because you're actually accumulating more units at the low levels. You will need to have patience. Market will test you, so you need to hold on. Get out of your equity savings funds, be in the other funds which you have, which are the large and mid cap category. Stay invested. If your focus is 7 to 10 years, do not evaluate the portfolio in 1 year. Do not start comparing the portfolio to fixed deposits at time when it is invested into equity, because you will say, oh, last 1 year if I would have invested, I would have made at least 8% on FDs and I'm losing 3% here. That's not the way to evaluate equity investments.
So do you recommend him any other fund, like if he wants to move out of Sundaram Equity Savings Fund, do you suggest him something?
So he currently has Franklin India smaller companies, HDFC Prudence, UTI Multicap. Firstly, HDFC Prudence has been merged to a scheme called HDFC Balance Advantage. So, the HDFC Growth and Prudence are merged together into one scheme. I think the schemes are fine. He just needs to probably get out of equity savings because I don't think he needs to be conservative. If he's still in dividend option, he should move out of dividend completely, get into growth, unless he needs the money. So he needs to first make a decision whether he wants the regular income or he wants to keep adding money, because his plans should change accordingly. So portfolio is not as per what I would really make it as, but he can have these regular changes. He must consult an advisor. Very important to make those goals, that specific goal sheet based on his risk allocation. So if he is conservative, if he can't see negative returns, we will have different portfolio for him.
Very true. So Mr. Raghavendran, do you have a follow-up question?
Yeah, that's what I wanted to interrupt in between.
Now
I took a house in Bangalore, one more property. So this is my second property. And the home loan, which goes, the EMI, I wanted to pre-close the loan as soon as possible by getting these funds only, and I wanted to pre-close the loan. Because of that reason, the moment I saw the drop, now I have to pay my EMI, and the dividends and the depreciated value also is very part for me actually.
Absolutely. So wait,
my worry is I wanted to pre-close my house loan as soon as possible when I want peace of mind by getting this money only now.
okay. So let's see what our guest has to say to you.
Okay, so he's 58 years of age, is what he mentioned. His thinking of closing the loan first is completely aligned with. I don't see the reason why he should be paying an EMI every month. Also, he's putting some money into SIPs. I would rather recommend to you today is to put 50% of SIP amount right away, even rather the entire amount, and start prepaying your loan on priority.
Right.
You don't need to have a debt at the moment. You're into a phase where your accumulation phase is over. You practically need to get into a situation where you're going to retire soon. You don't need to have any liabilities. You need to have a more comfortable life.
Right.
So yes, please prepay a loan immediately, and then you take the next step of then starting to invest for your retirement corpus.
So that's the suggestion for you, Mr. Raghavendran. And also, please sit with your advisor and talk to him, discuss these issues that are coming up for you, and discuss your portfolio as well. Well, that's all for this edition of the Mutual Fund Guide. Thank you so much for joining us, Abhinav, today. Viewers, that's how you save, invest and prosper with the right guidance right here on Business Television India. Thanks for watching us. Please don't go anywhere. We have lots more lined up for you.